Hello, everyone. Welcome back to the Prospero.Ai stock market live stream. Good to see Wolf in here today. Hello, Wolf. I see you in the chat. Welcome, everybody, as you're joining in. We have a bunch of good topics for today. Another busy week of earnings in the market. We'll get into some of the companies that reported last week and some of the ones that are going to be reporting this week as well. We have a lot of AI topics to get into today, a lot of news stories going around in the AI world. Um, by the way, everybody, as people are joining in, we are, let me get a live check, 5 subscribers away from 1,400. So if you come here often and you like the content that we give you guys and you enjoy the streams, please subscribe. Also like this video, but I want to get to 1,400 by the end of the stream, hopefully. So we are 5 away right now. So let's get that checked off for the day. But let me take you through some of our topics as George joins us in a few minutes. As always, throughout the stream, if you're watching and you have any questions or you have any topics you want us to discuss, and just feel free to comment them, and we'll be happy to cover them. But like I said at the start, before we had a few more people joining up in here, another very, very busy week of earnings after last week's busy week of earnings. So probably the two busiest weeks going on, and it's weighing heavily on the market. It's actually been positive. A lot of the earnings are coming in pretty good, probably better than feared as we got that sell off going into the earnings. So we'll cover some of those companies. We got some news about Apple, which is one of the ones that's going to be reporting this week. We have some positive and some negative news. Um, they've been hit by the EU Digital Markets Act time and time again. It doesn't seem to be having too big of an effect on Apple stock anymore. It seems like the market's kind of used to these stories coming out, but we'll discuss their latest product that's come under fire for the Digital Markets Act. And I'll also share a stat with you about the amount of share buybacks they've done over the past 4 quarters. So we have one negative, one positive on Apple today. Heading into earnings, comment right now. Do you think Apple is going to go up or down when they report this quarter's earnings? Next, we have Tesla, one of the most popular stocks that we cover. Um, Elon Musk made a surprise trip to China this past weekend, and very positive news came out as perceived by the market. The stock was up, I think, at over 14% at one point in the pre market. But they got good full self driving news, and it seems like that's going to be approved quicker than thought in China. So Tesla stock reacting very, 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 very positively to that. So we'll cover what that means and if it can continue for the company. And a bunch of AI stories to get to today. A lot of the companies, we were wondering if their AI part of their business. Hello, George. Welcome. I'll continue on some of the stories we're going to be covering. Um, but in the past couple of streams before earnings season started, we were wondering if AI was going to be able to hold up with what we were seeing in the market. As it was slipping, if the market was going to believe in it still or lose faith. But company reports have been pretty good. They're mentioning AI a lot. I have Oracle talking about it more, and we'll cover exactly what generative AI means and is, because I think some less AI savvy people that could help out. And it seems like AI is going to continue to be a dominant theme in the markets going forward. OpenAI signed another deal with the Financial Times for model training. We have a story about an autonomous shipping adventure. We'll get into that and what that could mean for the supply chain. And if you guys are familiar with Kathy Wood, if it builds off her deflationary theory going forward, we'll get into all of that. We have a little bit of foreign currency story, which we haven't talked about much on the streams. So it's an interesting thing that you'll want to stick around for. The Japanese yen is at its weakest point against the dollar since 1990. So we'll cover that, and if you should be paying attention to foreign currencies when you're making your investments going forward. And we'll end the topics for the day before switching over to the model portfolio with an update on the Starbucks unionization saga that's been developing. It actually went all the way up to the Supreme Court. A case just got heard, and we'll cover that and Starbucks stock going forward. But George, do you want to start today's stream like we usually do with what's going on in the market, but also talking about we're in such a busy earnings season. Uh, we covered three in the newsletter, the trio of big tech that reported last week. So we'll talk a little bit about them, and then maybe we'll jump into some more that's going to be happening this week.
Yeah, it's so interesting, and I mean, I think what we're seeing, and like on an ongoing basis, is just like such a tight and unsure market around AI. Like, yeah, sure, we get these kind of rallies, like mini rallies, and then it gets slapped back a little bit. But yeah, what we covered in the newsletter, I think, is particularly important because when you see what happened with Meta basically had a capex forecast on AI for 33 to 37 billion, and they only raised it to 35 to 40. So we're even still talking about a range. Like, they could very easily still be within the original range. But basically, what we saw is just some market nervousness. That's why Meta got hit, and like we kind of contrasted these 2 points in very interesting ways, where it's just like Google started to show monetization on AI in ways that their CFO presented that was exciting. I would say especially exciting to the market beyond their good results. But Meta also had a double beat. But basically, what you're seeing is essentially, and I would guess solely because Mark Zuckerberg has spent poorly in the past on the metaverse, you're basically seeing that's how tight AI is. You're basically seeing that, like, even someone spending in AI, the same thing that got Wall Street excited about Google, is not enough to keep the Meta rally going. And Meta's rallied so much, was going to have a correction sooner rather than later. And it's unsurprising that it falls at the feet of Zuckerberg, who, Wall Street forgives, it never forgets. And I think that that's probably a very important thing to remember about, some of our other stories coming. But yeah, I think that that's the super important point that, we're just talking about, what amounts to, a very tight market. And we talk about that in large cap growth all the time. We see some days large cap growth is up and then down the next day. And the reason that we have started to follow that more than sectors, in terms of just like this AI, is it overvalued thing, is because in large cap growth, you do have some of the big communications giants like Google, Meta, et cetera. So it's more encompassing of, all of these growth opportunities in AI. So yeah, I think that, one of the things that's what we're watching very closely. And we even have seen a number of times, I'd say a couple last week, a couple the week before, where large cap growth is up or down in the morning and then reverses in the afternoon. So we are seeing a very unsure market on that, and it's going to be very hard to trade. And even SMCI, we saw it going down again today, and we were like, oh, is it time to get out? Is it time to get out of SMCI? But we held on to it, and it went up, from I think as low as like -3% to up above. I think I saw it as high as 2.2%. So yeah, I think that that's one of the things we're going to watch very closely. I think is if SMCI earnings are good, following basically them canceling the pre earnings meeting and that making everybody very nervous, that going down 25%. If they post ultimately good earnings, I think it's going to start carrying the whole AI market up again. And if they don't, I think it could be another very bad day for them and a bad day for all of the other stocks like NVIDIA to transform. And yeah, I mean, I think that's very interesting. And he's talking about on, the increase in upside, basically a marked increase in NVIDIA in the long term. And I think that what that might make us end up doing is playing NVIDIA for SMCI earnings, much like we're talking about, because there's a lot more long-term in bets on NVIDIA. And I think that's what we will probably end up doing.
So you talk about how
But yeah,
Meta stock.
I want to just make it clear. We're excited that upside breakout has gone up. That was always one of our biggest knocks against NVIDIA, that it didn't have those convincing long-term bets. But to see it there now, yeah, very excited.
Mm-hmm. So you talked about how Meta stock, reacted to the amount they were going to invest in AI going forward, and that piece of news announcement. So is that the market having PTSD off the metaverse saga of them, pumping money into that, or is that actually like why wouldn't the market in this AI market where like when companies talk about AI, it's so positive? Why would the market react negatively to a story like that?
Well, I think it's just like I think it's about Zuckerberg personally and him just like burning through. I think some of it is kind of like a larger critique of Zuckerberg, where it's just like um Meta got too big for him, right? He's the original founder. He takes it from nothing. Then he mainly grows by acquisitions. You see like a lot of their new products, like, Instagram could have really taken Meta down. WhatsApp was like encroaching on some of their space. I mean, they famously tried to acquire Snapchat too. And so like that's been their main defense. Zuckerberg hasn't necessarily been that great at making new products of his own. And when he has spent, it's been, the spending has been, on something like Meta, like one of the biggest failures I've seen from a large public company. And the way that we really talk about that, and it's just like, it's not really anything against him, but especially if your bread and butter is acquiring companies and growing that way, going so far out of your wheelhouse generally isn't a good idea. But beyond it being a bad idea generally, I just think it's a bad idea for companies to do early stage R&D that aren't highly competent in it. Like especially a company that acquires like Meta, why not wait for a metaverse play to gain a good amount of base traction and then acquire them as you've done so other times? Why do you have to get on the ground floor of that? So I relate it to everything that we're saying is like, I think what people worry about with Zuckerberg is discipline, right? And if you're just like needing to raise your capex by 2 billion, I think it's not necessarily just about that 2 billion in the estimate. I think it's more about like, okay, is he gonna get out of control here again? And that's the worry. And personally, like why we still like Meta, we're not going to own it in the short term because we think there might be a correction. But why we still like Meta um, is that we ultimately think that it is a good. They've made a lot of good choices, like in PyTorch is now kind of beating TensorFlow. TensorFlow is like the gold standard for neural nets. Then you have Llama that could really like be like the I'm talking to and advising a new startup. Then I might announce a little more, and we'll see how it goes and how those conversations go. But it's in the legal area, and one of the things that I say is like you got to use Llama because you'll have to build custom security. The downside to Llama is ChatGPT has some embedded security, but if you're talking about something in the legal space, then you absolutely need to build your own security. So that makes Llama like a necessity because you aren't beholden to a place like Microsoft. Llama's open source. So I mean, I would say I would be more nervous about the way it's going if Zuckerberg wasn't making so many good choices in algorithms, AI there. But yes, I definitely think uh, that we're getting to a place where he's made a lot of good choices, and I don't necessarily think the skepticism is there. But I would also be worried if you kind of see those numbers keep creeping up. Much like them, it's just like, has he maintained that discipline that I think everybody wants him to see?
And so, even though Meta stock didn't react too positively to earnings, they did have strong advertising spending. Snapchat stock went up 30% off advertising. Google reported good advertising. So, should we read uh, anything into that as investors? Does that show strength within the economy that advertising spending is strong?
Yeah, I mean, I think there's a few things about that. One of the things in terms of ad spending is that what we always kind of talk about is that you'll see ad spending be the next thing that gets hit after consumer spending goes down. And we're actually seeing consumer discretionary stocks. They've been one of the best, like much to my surprise, um, has been one of the best sectors, when you go back 3 months. So I would say that that's why I'm feeling good about ads, right? Yeah, let's see. Consumer discretionary. Yeah, maybe I was thinking on the 1 month timeline. Yeah, the consumer discretionary is kind of in the on the 1 month timeline, they're towards the center of the pack. And I mean, on 1 week, on the last week, it's been the best sector. And I think that's maybe what I was weighing a little more. Um, on 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 3 months, yeah, it has been a little bit behind some of the other ones, but it is kind of towards the middle of the pack. But yeah, I mean, I would have expected it to be kind of a laggard. So yeah, that's basically showing what we're talking about there. Um, so yeah, I think positive ad numbers, the fact that if consumer spending is still strong, of course ad numbers are still going to be strong. And that's why we're kind of comfortable going long some of these ad names, because to us, we'll see it impact consumer spending. And then that's kind of like our trigger to start, making sure we get out of the ad-based businesses, but we haven't seen it impact consumer spending yet. So we're not, sounding the alarm for that yet either.
So I started off the stream with our viewers talking about how busy of an earnings week we have, and some of the companies. I'll just run through a little list of them: Apple, McDonald's, Eli Lilly, Amazon, AMD, Starbucks, Coinbase, Block, SMCI. So I have some stories to get into about Apple, but I mean I know Prospero has loved Eli Lilly. Are any of those other companies earnings you're going to be looking out for and seeing how they do, or anything interesting in that list I just read off? Some of the biggest ones we have this week besides Apple.
Yeah, I mean, one of the things that we're definitely going to be looking at, another thing we're looking at, actually, because the technical soured a little bit and it looks right, we have a new favorite healthcare name, and it's SRPT, Sarepta Therapeutics. That's because the technicals have gone a little sour on Eli Lilly. We're looking at that, and that actually reports on May 1st as well. So that's a name we're looking at. I think Apple is going to be very interesting because we've seen a bit of a rebound in Apple, and it's going to be interesting to see what they report on the Vision Pro. Although I am starting to hear more people say they don't really like the Vision Pro. So yeah, I think that's there's Amazon's going to be huge in terms of like this recovery. I think especially what we see in terms of what I would say uh outside of their cloud business, that doesn't matter. I would like to see what they're doing in kind of like their core retail business. I think is going to be very indicative of, kind of how the broader market fares. I mentioned SMCI, AMD's this week. I do expect AMD and also Nvidia to post great earnings. I think SMCI is the only one that could kind of, as I mentioned, make or break things. But yeah, the big three I'm going to be watching for are Amazon, SMCI, and then I think Eli Lilly is good because it's kind of like in the R and it's kind of more in the R&D space, and I would say more than for healthcare, and I would say more than the actual earnings. I think the reaction to the earnings is going to be super important because it's going to say, like, outside of AI, what are people willing to pay for growth right now? And I think what people are willing to pay for growth is an important question. And to get the data point of like, okay, there's AI growth and then there's growth outside of there. So what would be very interesting, what I would love just as a data point, I'd love for Eli Lilly to come in as close to estimates as possible and then kind of see what happens to the stock, because that'll give us an indication of what people are willing to pay for growth. And we're starting to see that soften on the Eli Lilly side when that's been one of the strongest things. So I think those are going to be the big ones. I think, obviously we got the Fed. We'll talk about that a little later, but I think, yeah, I think those are the big ones. I think if SMCI doesn't do well, if it misses, and maybe they canceled their pre-earnings meeting just because they weren't going to revise up, and they thought the market would react poorly to that anyway, or maybe they, who knows? We'll see what happens. But I think those are the things specifically I'm looking for. I'm concerned about an SMCI miss below. I'm going to want to see an Amazon. I want to see them beat on revenue, to be more specific, to make it very specific. And Eli Lilly, I really just want to see how they're guiding, how market reacts to, like, even just like a close, because if they beat, it's hard to tell if people are willing to pay for growth or they're willing to pay for those earnings going up. And then we'll also look at SRPT. We'll see, because that's another, high growth company, high profitability in the biotech space. And we'll see, again, both those data points, what people are willing to pay for growth, because SRPT has been doing very well lately, and that hasn't really been a name that as many people are paying attention to. And I just want to see SRPT PE because I want to compare that quickly to information not currently available. Nasdaq's been down.
Well, just as you're looking for that, George, just hearing that news from you, looking at SRPT as the number one, that caught my ear. For viewers that don't tune in every stream, Eli Lilly has been the staple at the top, so that's interesting to hear, and I'm going to be watching that for sure this week.
Yeah, we got SRPT, a forward PE of 45, and then 45.85. So yeah, that's looking like a value compared to Nasdaq's been down. That's interesting. I don't want to call them out. They're a partner of ours. Let's check out Eli Lilly. Yeah, Eli Lilly's at 58.76. So yeah, I think that's a good reason to see why SRPT is coming back a little stronger.
A lot to stay up to date on this week in earnings. So you guys all have to tune back into our stream on Wednesday when we update everything. But moving on from that opening segment, we have some Apple news that came out today. And it seems like Apple stock doesn't really care about this news at all anymore, as it's up 3% today. But their iPad OS got dragged into the Digital Markets Act scrutiny that a lot of Apple products have been facing. And I was telling you before we got on here, it's kind of funny, but it's not really funny. Maybe it's more ironic. It's like, what products do they have that don't fall into this act? That's the list we're gonna have to start making, because now it's their iPhone OS, their iPad OS, their App Store, or Safari. But this got announced and the stock didn't react at all. So it seems like the market is just kind of over this news. So I wanted to combat that slightly negative story with a positive one, so we share both sides. I saw that in the last 4 quarters, Apple has done $78.1 billion in share buybacks, which has been 456 million shares. So does that come directly out of the market cap, and it's kind of like a deflationary effect on the stock for investors?
No. So I mean, it depends. I doubt Apple's taking them out of circulation, right? So when you look, there's shares available, and there's also shares issued. Those are two different things. Like, they could be issued but not available. And generally when companies are buying back shares, they're still available. They're just in kind of like in the treasury. Sometimes companies will take them out of circulation, because that will shrink the market cap. Your market cap is the available tradable shares, times the price. So I'm actually not. That is a good question in terms of shares that are issued but not available. If that goes into the market cap, I'm actually not sure what that is off the top of my head, or if it's different. That is worth looking up and see. I think this is very important. You always got to be honest if you know something or you don't, and that's what we try to do here. We don't pretend to know things that we don't. But anyway, unless the company has some specific reason for wanting to take them out of circulation, they're generally just holding on to them to either sell them into the market later, just hang on to them. Having, one of the things that helps is when you have less shares in circulation, it becomes harder to short your stock in terms of in the market if they're worried about that. But sometimes, I'd say that, when you see these buybacks, part of it looks like a symptom of their innovation problems, because they could be spending that money instead of buying back shares R&D on new products. So that is essentially saying that they don't have enough ideas. One of their best ideas, instead of innovating, is grabbing the shares, and that is not a great sign for a company built on innovation. And I think the reason that some of these things aren't moving a needle is everyone just needs to see where sales of the iPhone are, where sales of the iPad are, where Mac sales are, where I would say especially where they are, especially like if where the VR headsets are, even though it's early, because at the end of the day, that's what they're about. Like this App Store stuff is going to make people, nervous. There's a lot of like potential legislation on it that can go one way or the other. But at the end of the day, those are very hard events to predict. What isn't a hard like event to predict is the direction of their core business. So it's going to be very, very important, especially if you see, dual data points, right? If you see data points like Amazon's core business, like their retail sales are there, right? And then Apple isn't growing, that is a bad sign.
Yeah, so it'll be interesting to watch their earnings this week. So do you expect? I mentioned it, but I didn't really get your response. Like these digital market act scrutiny, do you expect them to ever have any outcome that like directly um, affects Apple as a business? Because right now the stock and the shares are just kind of ignoring it, and it's just noise. So um, what would we need to see, or like, do you even expect them to ever actually affect the company? It's like, is Apple more powerful than the EU? That's what I'm getting at.
No, no. I mean, I think you might ask some people at Apple or the Apple zealots, and they might say yes. Um, but no, I mean, because at the end of the day, like if you were talking about like a product, like a phone, and at that kind of market share of there's something, but like at the end of the day, what they're doing is they're just kind of like a monger in the app store, right? And like as a monger, a very like a monger with a great position, there's definitely they have some power, but at the end of the day, the value they're providing with that app store is not a tremendous amount of value, and they really run the risk of, I'd say especially something coming along that's much more of like closer to free in terms of the app store. Because if there was a viable alternative to like being on iPhones, and they probably will never let this happen other than the App Store. But their phones don't have quite the advantage, and I think a lot of the advantage that they have is just that people are familiar with the software. If more and more people kind of defect because they like Android and they don't feel like the features on Apple are quite where they were, that could be a major problem for them. But I don't think it's happening anytime soon. Um, but I don't think these headlines are great for them. I don't think any company, wants to take on a governing body that's, ultimately like trying to protect the privacy of people and try to, get rights for like these up and coming, app developers that they're just like, basically siphoning revenue off these like new companies. Like that makes it hard to innovate. So I definitely think that, that is an issue that a lot of people are going to keep track of. But for now, I just kind of think they're both too powerful to kind of like swing too much weight one way or the other, and we're just going to have to see. I think eventually, like what I'm saying, I think eventually what we see is they're kind of go back and forth, and then Apple makes some concessions. I think probably a little on price, but it might just be like going down from like 33% to 30. But yeah, I don't think either of the parties are kind of powerful enough to dictate.
So our next story of the day seems to have taken the market by a bit of a surprise. Elon Musk took a trip to China over this past weekend, and some news came out how after reviewing the data, uh, China full self-driving will probably be approved quicker than people had expected before his trip over there. So is Tesla stock was up 13% today. So is this news that newsworthy, or maybe are we seeing some short squeeze going on with Tesla stock after they were hit so hard, and maybe people got over their skis in that direction? So what do you make of that China news and what's going on with Tesla today?
Yeah, I mean, Tesla is a very, very hard one to look at, right? Because one of the things that we kind of always said with it is like it got like pretty scary from a PE, especially a forward PE ratio, like relative to other stocks. But I think that China, I mean, it's obviously big news in China, and a lot of people are talking about FSD. But I think on the legislative side, they haven't had everything figured out, especially in America with FSD. I mean, some people like it seems like more and more people are just like using it, whether or not it's legal or not. And that's kind of in like the Uber move fast, break shit, like kind of thing. But it's like weird, like to think maybe that like that's a concern of mine. Maybe it starts getting legislated. Now, of course, in China, like it's very exciting and that's a huge market. And especially like, FSD is not cheap. So we're talking about like a potentially huge like revenue um, you know, stake there. But the one thing that kind of always happens with Chinese products is like they let you into their country and then all of a sudden you might see BYD with their own like very similar full self-driving technology, and like you send enough Teslas there. Like I think what is interesting is it's possible that Musk, like FSD basically, like I don't know how much of the code actually gets downloaded on your car versus just like transmitted through the internet. I think it would be pretty dangerous for FSD to like be moving purely through the internet, but who knows? Maybe some of it does, like, and he uses like Starlink to send the messages down. But I will say that like there's that side to it. Maybe Elon Musk is many things, but he's not dumb. And if he's going into China, he probably has some plan to stop them from ripping it off. But on the flip side, China's not really dumb either, and they kind of find a way to rip off every like product that gets there. And what you might even see is like both sides like thinking they've got it. You might think China being like, oh yeah, we're gonna get Teslas here and we're gonna be able to rip off the full self-driving and give it to one of ours. And you might be Musk saying the same thing on the other side, like those idiots think they're gonna rip this off, and they're never gonna do it. And who's correct? It remains to be seen. But the nice thing about this is like China is not known for like, yes, they're known for like being like, oh, us, we didn't rip that off, even though they definitely did. They're not really known for their tact on this stuff. So the nice thing about this story is I think we're definitely going to get a winner and loser here. Like if FSD really takes off in China, and you see that like it's been years and it's still the dominant like self-driving product there, tip of the hat to Musk. But if it's a few years in, they had some nice growth. BYD's got their own self-driving product. It's very comparable. You might say that like, oh shit, Elon got a little desperate here and he took a risk because he saw everything dropping and he needed to like make a deal with the devil, so to speak. So yeah, I mean, but you never know what goes on behind closed doors here, and that's what makes like everything involving Elon Musk so interesting. Because it's possible they just have a deal where it's like, hey, just give me 5 years here, and then I'll give you FSD if you promise not to steal it, you promise not to compete with us. I could see Musk making a deal like that because he gets the China market, right? And he gets the growth he needs for Tesla in the short term, like growth, money being sent back to the mothership, and everything's above board. I don't, that is the nice thing about, I would say, both, these two sides that both have like, Musk with a great product and China with like, kind of the leverage that they have of their market. You could see them making like a reasonable deal. We kind of talked about it as like a winner loser zero sum game thing here. But you never know. Like China is very practical. I think Elon Musk, as a business person outside of his personal life, he's very practical and very good at like kind of getting these major deals done with huge players, whether they be governments or partnerships, etc. So it's going to be really interesting to see. But one of the things that I love about this kind of stuff is like the way I cover it and everybody sees this, I'm always just like, well, it could be this, it could be that. Like the thing that I always think that it's hilarious is when people, take strong opinions. And like I've definitely seen people, like I was on a X space this morning where some people were talking about it, like, like, oh, it's just like a great thing, it's a huge market, and doesn't really talk about the downside. But like, yeah, I think it's foolish to discuss this story and how big the Chinese market could be without also mentioning the absolute non-zero risk that China rips off his product.
And I think that's one of the hallmarks of our stream. We cover all sides of the story, I hope our viewers think that. We have a lot of AI things going on in the world, and I have a couple AI topics coming up. But just before we start into the meat of it, I thought it was funny. OpenAI signed another deal with another like news company, the Financial Times, to train their AI on their content. But when I saw this, I'm like, OpenAI already trained their like it's done. So like this is kind of like, what does this
Yeah.
deal even mean? Like I don't get it. It's kind of funny.
Well, I mean, for anyone that's ever crawled something, there's complicated paywalls, right? And you can crawl, you can grab a story, but perhaps the pay like Financial Times did well with their paywalls. But I mean, I think you're also starting to see like the legal realities, right? Where it's just like I do think it signals a move at the very least that they're worried about the legal realities because there's a lot of lawsuits coming in being like, hey, you can't train on our data. And I think as they get bigger and bigger, I think they do have to think about that, right? They do have to think about like, oh, like, is this something like I think at the very least to win some of these court cases they might have to win, they might have to be like, no, see, we pay for the Financial Times, we pay for this, like you don't know like where we're getting our data. Because the bottom line is like to go in and like pick apart these training sets and like knowing exactly what data they use or whatever is very, very, very difficult. Like the amount of data they're consuming, like, and a lot of the times for those that don't know, they use like lots of different compression technologies. So a lot of the times, by the time you even get to the training of an algorithm, a data like a data set is so compressed that you can't even see, you don't even really know what's in it anymore. It's just kind of like these vectors, or like I think it's actually beyond vectors now. But I think that that's like a very important thing to note, that I think they probably will, at the very least, make enough of these deals that they could play devil's advocate. Like, hey, we pay for content. How do you know we're stealing your stuff or that stuff? Like, so I think it's that, or it could be the start of a partnership, right? It could be the start of like, yeah, like I think that's actually a very smart way for OpenAI to make partnerships where they're just like, okay, you give us the data and then we'll come, or we buy the data, and then not only do we have like a legal training set, another thing that could happen is they could start basically uh selling products back to them. Like, hey, like we bought this data. Like, do you see the cool Financial Times articles we started to write with AI? Like, maybe you want to like at the very least discount our data feed, and we feed you AI. But yeah, I think that it's very the relationship between the inputs and the inputs of Gen AI models is very much not like it's not there yet, and there's going to be a lot of lawsuits that legislate like how it gets there. But yeah, I think it's very interesting, and like yeah, I mean at the very least they're going to have to start, as they can afford it, acquiring more of these like legal training sets, because otherwise the legislation could get pretty murky if they don't even have like say like, hey, we do pull in all this data that we pay for.
Okay, so we've continued to see companies highlight their AI capabilities in the earnings season so far. A lot of them specifically talk about generative AI. If you could explain for our viewers and myself what that is in simplest terms possible, that would be great so we have a good understanding. But I also want to ask you about like when these companies talk about AI and how it's going to affect every product of their business, like I just saw Oracle was talking about it. Is it a 0 to 1 change where like they did not have anything like the technology we have today, like a year or two ago? Or is it more of a blurry line where it's like it's kind of built on all of the capabilities they had and the tech that they had, just a year or two ago? Because I think when people hear them mention AI, they think it's like brand new, like a year old, like 0 to 1 complete change. So maybe if you could talk about that.
Well, I think you kind of touched on a lot of the important things. Generative AI, Gen AI, um, that that's all stuff that did come around like pretty much like I forget how old it is, but a lot of it, a lot of Gen AI is like just generating stuff, right? That's what it's called. That's why it's called that. Whether it's like um, images or text or whatever, like a lot of AI before was more focused on like things like classifying or predicting things, right? Which is very different than generating things. So that's when it really crossed into Gen AI. That's what like a lot of the new stuff is. And the story I always love to tell about Gen AI is actually about how like the transformer technology that underlines most of it. It's a type of algorithm, the transformer. Um, and the transformer, the main thing that it does is it works in steps, right? So it's doing this and then this and then this, as opposed to just like trying to solve the problem all at once. So when you're seeing like when you see like OpenAI write something for you, that's actually like the transformer model working on the text in real time, right? It's not like, let me write this paragraph. It's like, okay, this is just how I have to start. And then based on the last word, this is the next thing. And the funniest thing about the transformer technology is that Google originally made it and they didn't think it was very good. And they actually like let OpenAI have it because OpenAI, like many of these like, AI like charities as they started, which is just really funny. I don't know if they were actually charities or foundations or like whatever, but a lot of them were just like trying to get. I have a lot of friends that worked at various ones. OpenAI wasn't the only one. The AI community is not that large, and they were just like, "Hey, like let's do something good, like and make AI for good." And there are some that are like generally genuinely doing that. So I don't want to like make fun of them, like the organizations too much. But OpenAI was one of the ones that pitched that, and like I say that because they had people from Google and Microsoft and Meta, and they were all just like combining, trying to make good. And so yeah, like the transformer technology was like something that Google just kind of like let OpenAI have, like, and it's kind of interesting. Like imagine like we talk about all the time how Google isn't always the best business entity, and it's just like yeah, like I don't actually know. I can't speak one way or the other, but I don't think that they're getting any like royalties or whatever from the transformer model being used. So that's kind of something that they seemingly like just let the other side have. Um, but yeah, I think that but I don't actually know that deal, so I don't want to speak exactly on that. Regardless, like you can clearly say they let it go too easy, considering that like OpenAI is basically built on this transformer model. But yeah, in terms of like, I would say in terms of like what's changing and what's different is just kind of going back to what we started. The difference between like something that classifies something, right? Is something that does have like limited, like you're talking about like an analyst role, you're talking about people that analyze information. That's where like the classifiers are. But when you're talking about generating things, there's so many different like roles, responsibilities, whatever, where you're generating things. So that's why this is the thing that's going to like take all the jobs, blah, 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 because like to generate content or generate things, it's a lot of like, I mentioned that legal startup that I've like, that's about like generating documents. So, there's a lot of opportunity in generation now versus analysis, which those were more limited capacities. And so, yeah, in terms of, the actually ability to generate, I think you have to look at it two ways, right? There's the way that says, like, yeah, there was a major breakthrough in transformers, LLMs, and then I would say even just like putting them in front of people and seeing how popular they are. But you have to remember that these things are trained on things. So it's kind of just like the more interaction points they're getting, the smarter they are, and the more you could say they could actually do that job because they're learning. When you do your job and interact with an LLM, you are teaching it how to do your job, essentially, like literally. For someone that's ever like trained one, I've recently started to train one, load in documents. So I think that is a very important distinction, right? So I think you have that. And then um I think you also have basically um a just the momentum behind it, the spending going into it, that everybody realistically thinks. If you think about that relationship, right, between getting more training data And then I see a little delay. Am I on a delay in terms of you hearing me, Stephen?
No, it looks good to me.
Okay, maybe it's just my computer. Um, you're getting more training data. You have this bigger appetite, so you're actually creating a path for it to get stronger, right? And I think that that is a very major part of it. And so I think that, yeah, I hope you might have questions going back.
No, I was just gonna start talking about our next story. So I don't know if you have anything to finish. No? Okay. So, last AI story of the day, or AI like. We talk about full self-driving all the time, but I wonder if our viewers knew that this was happening, autonomous shipping. So a company, and also like an adventure with the government, they just took a 13-hour trip and successful trip with an autonomous shipping boat. It was funded under the program called AutoShip, and I'm sure our viewers are familiar with Kathy Wood. Um, she has a theory that's been going on that she's talked about for years now, about how, as tech and AI advances, we're going to see deflation happen because, the supply chain is going to become so efficient and so automated that products and services just can become cheaper and cheaper over time. And I've also seen Sam Altman talk about this, the OpenAI CEO or founder, one of the founders, about how we're going to have an era of abundance. And I know I've said that to you, and you kind of laughed at it before. But you know, um, do you subscribe to that theory where these advances can provide deflation, as inflation is a big fear amongst investors in the market right now?
Era of abundance is kind of a funny thing to say because it's just like for who, right? Because like, yeah, I agree that like when you get more of this automation, that the goods get like there's less labor involved and the goods get cheaper. But what's the other side to that? Like abundance for who? Like there's two sides. There's like supply and there's demand, right? And when even if like the supply is coming in at low prices, where you would expect demand to be there, if there's not enough people making money, like McDonald's lowering and lowering their prices is all fine and good, but if people don't have money to spend at McDonald's, especially the kind of people that like, had those jobs before, like, I think that's the scary part. And of course, it's like people at the high level saying that, but there needs to be like, I think it could be an era of abundance, but there needs to be a way to make sure that the people that lose their jobs, like in this, like don't get left behind because like there's practical things where it's like it's not just like you might have money to buy goods. So many people have healthcare through their jobs. If all of these people are getting laid off, like are they going to be able to afford healthcare? Are they going to be able to like are they just in like a different position? Are we just going to have some people just like dying at much younger ages because they get laid off and they don't have healthcare and they like can't yet they're not like old enough to get Medicare yet? Like I think that there's huge problems in that like generalized abundance statement where it's like, yeah, I do think it like the access to things, the relative price, all of that stuff could be there, but like we have to figure out something about what's going on with the jobs around that because that's always the other side. You can't just talk about AI lowering prices without also talking about the fact that like in order for that to happen, for that to impact the prices, a lot of people have to lose their jobs. And what is going to happen to those people?
Yeah, it's very it's scary, but it's also stuff that I feel like it's going to take a lot of time to figure out all the stuff you're hitting on, and it's not something that's going to happen overnight. It's going to play out probably over years and maybe even decades. But um, I think humans will figure it out. We'll figure it out, right, George?
I don't know, man. I think
Oh no.
I think some I think that that's the kind of thing that is a little too optimistic for me. I think people have to wake up. I don't think enough people are talking about this the right way. Like I think that people don't like universal basic income, and I can understand there's like some scary things about like communism or whatever, but it's just like sure, let's talk about like what else? let's talk about like creating more jobs. What are the jobs that are going to create it? Like I've thought for a long time, America should like start working on our infrastructure, and especially making like renewable infrastructure. Give people jobs that are ultimately going to lower the costs, right? Jobs and cost lowering is like huge. Um, and like, there's so many industries that could be, people hate the word disrupted, but improved, that there could be support. And like, for everybody that's like, what's like, for everybody that's like, oh, we don't do that, we shouldn't, like, the New Deal essentially made like modern America and made it strong. So like why we have a model like that, and we like watch our infrastructure just like get older and older. We see this kind of like macro job threat coming where everybody just talks about the upside of like job loss, essentially. But downside, I do think people need to wake up. And I think people are just like very like all of this rhetoric. And I understand like the country's going deeper and deeper into debt. And so like any idea of like spending makes people nervous. But the bottom line is if we don't figure out real ways to create jobs and create them in America, while we definitely see like already jobs getting lost before this kind of like AI revolution, like we are in big trouble. And if we don't start thinking soon, like basically what happens is like what we already see. We see a lot of people like addicted to drugs, losing their jobs, kind of in despair. And what do people in despair vote for? They vote for the enemy. They vote against the enemy. They don't get voted for. And that's what we kind of see on both sides. Both sides just kind of like voting against the enemy, and no one really having a good plan for a more modern America that we've been seeing China prepare for. Like China has tons of high-speed rail. They've installed a lot of like high-speed internet. They've built a lot of infrastructure, new cities, essentially. Like we see our primary competitor doing this stuff, and we do nothing. And I think that is a major problem. That's why I like came back at you a little bit, Stephen. You could be like, yeah, we'll figure it out. But it's like, I'm a data person and we haven't done a lot of figuring it out yet. It doesn't look like, all of the things kind of like the policies proposed from, both parties. It's like, yeah, sure. Like, just to play devil's advocate here or whatever, like, let's say we kick out all the immigrants, which that might make our labor problem even worse. But I mean, I need to debate that. Let's say we can get all of the illegal immigrants out, right? Does that really solve our labor problem, or does it make it worse? Especially when you're talking about like the jobs that the illegal immigrants do, like tend to be jobs that like a lot of people don't want at those rates. They're not really living wages. And B, those are the exact jobs that are going to get automated. So again, it's kind of like, even if we have these kind of like, these plans that a lot of people like the voters get excited about, like they aren't long-term plans. Like everything that I've seen is always a short-term plan. We're always talking short-term, and it's coming back to bite us in the ass. And I'll say actually one more thing on that is like at this point, there used to be Republicans cutting the budget, but Trump spent more than Obama, and I believe Biden spent more than Trump on a per year basis. So we don't really have anyone cutting the budget now. We just have more and more spending. Neither party is going to take care of that. And that's just as big of a problem. Like we get more and more debt, and our relative dollars aren't going as far, even if we decide we want to do some like New Deal type things. So like, yeah, our time is running out in terms of being able to make policies that actually like create a more modern, lasting America. And as far as I'm concerned, we don't have anyone really talking about that or doing that. We just have people arguing with each other about social issues.
Well, I see Wolf commenting in the chat. He seems to be right with you on what you were saying. He put it very simply: humanity will fall. But I wanted to spin into the a topic we had that kind of relates to jobs a little bit of what you're talking about. Starbucks has been battling people trying to form unions within their company for a while now, and actually a case got heard by the Supreme Court, and 7 Starbucks employees from Memphis, Tennessee, will have to be hired back as they were terminated, found by the court because of them supporting unionization efforts. So We covered Starbucks a few streams ago. The stock didn't look great. It's really been dragging for a while now. So I'm sure these news events or headline risks are weighing on the stock. Um, do you think Starbucks should just like stop fighting it? It seems like it's really hurting their stock performance and just kind of accept that some stores are going to unionize.
So I think it's like we see this all the time, and we talk about it in reference to like Uber and Lyft, and they're fighting like instead of like paying benefits, like fighting it in legislation. And I think there's a very interesting side to this where it's just like, hey, some of these businesses, and we talk about Starbucks, like Starbucks literally built so many stores, they'd rather like cannibalize their own stores. They were just trying to put everything out of business. So it's like when you have that many stores, like it doesn't surprise me when you're just like, oh shit, like we can't really pay these people a real wage, right? Because you're basically over, like you're not even building efficiently. You're building too much to basically overwhelm the audience. That doesn't sound like a very good way to have a profitable business. Now, there's a couple sides to it. So of course, like unionization means that they're already their business that already kind of is like, I would say at like peaking or on the decline. Like then you start to talk about unionization just like killing, right? And like I know I've said some like, relatively commie stuff for like someone that has a stock company and has worked on like the buy side of the market for a long time, even though communism doesn't work. That's one thing, that we've seen. It's just like another, like, it's just like you just get a new oligarchy and then you don't even have the freedoms there. So I don't necessarily think anything like that is a problem, but I do always say that it's kind of interesting. Like, we say we're a free market, but that doesn't stop us from like giving oil subsidies on an ongoing basis. Market isn't free then when we're supporting like, pretty much dinosaur businesses to keep, staying alive for reasons unknown. I mean, other than lobbying. But I would say this: you do have a flip side where you basically see what happens with um, what happens with uh, basically unions, right? And you see like these car companies, and you see car companies like GM, Ford that have dealt with the unions all these years, and it creates legacy costs that makes them have non-viable businesses. So it's kind of hard. Like in one place, I'm just like, well, people should get paid a fair wage and unionization should be fine, just on the surface. But these unions, on the other hand, they sometimes get too powerful, and they like, you could say they kind of like create a cancer in a business that prevents it from being healthy long term. So it's kind of a hard situation where like people should be allowed to unionize and they shouldn't stop. Like that kind of thing is really against, the freedom that this country was built on. But on the other hand, I do see a side to it that says like, hey, like there's got to be a way that prevents unions from keeping companies hostage and creating non-viable situations. And that's just like really really hard to do, because there's like arguments on both sides, and you can say that like, well, it's up to, at the end of the day, I think where I kind of land on this is it's up to the company and the workers to talk about if they're creating like a viable situation. And it's really hard because you look at a lot of things right there on this, and you say like, okay, like our car companies like have a hard time competing, but like a lot of that is because Japan has, they make lower price cars because they have put in so much automation. And especially in a place like Germany, and German cars, like a lot of that is renewable energy. So like the way to power their factories, create that, like they could be, I haven't dug into the numbers that, but that could be a huge cost savings for them. But it's kind of hard, and it's a hard, the answer, like where I ultimately lie on it, is that like I don't think companies should get to union bust, but I do also think, and people should be allowed to organize. But I do also think there's a reasonable case to be made that they're just like, okay, like there's certainly a way to back into being like, okay, what's a living wage what is a reasonable amount to make, and not just basically being able to hold the company hostage once you have the union to just like go up in terms of pensions, compensation, things like that. But it's very, very hard. But I don't think if I think of like the Constitution and I think of America, like I don't think like unions not like being pressured not to exist is very American. I don't think that that's where it is. But you got to remember that one of the things that Teddy Roosevelt did was not only trust busted, but he also worked with unions. And like when government worked well in America, you did have this kind of like thing happening a lot more where the government would make sure that there was kind of fairness on both sides. I would say some of our better governments, but it's been a while since we've had one of our better governments, I could say, that kind of steps in and says, what is a reasonable middle ground here? And you've had plenty of politicians like come in and negotiate a middle ground for between unions and businesses historically. We just like as a country, you're just like not operating in a way currently where we're effective or efficient. And it's just kind of like, it's kind of sad to see what America has become.
So we have one more story I wanted to mention before we'll do our switch over. It's about the Japanese yen and how it's weakened to the weakest point against the US dollar. It's trading 160 to 1 since 1990. So, firstly, and probably most importantly, should all of our chat and us plan a vacation to Japan? But really, how much do you pay attention to foreign currencies when you're making your investments and just overall?
So that is a good question. And I think it's about like one of the things that I always think about and I always advise people to is like, what's my wheelhouse? Right. And the permutations of this, like if I invested more in raw materials, then currencies would be a lot more important. But one of the reasons I don't is because you really do need a very good grasp on these international like monetary situations to do well, right? And I think that's not your real. It's like, do you really have time? I mean, I certainly don't to study like the Japanese economy. I mean, beyond like I know there's an aging population. That part of it doesn't really help their macro situation. But I think it's so important to just be like, what's my wheelhouse? And like, is the yen specifically affecting American stocks, that much? No, I mean, I wouldn't say so. Like, there's things they could do that definitely, like, in terms of things, they also own a lot of our debt. There's things they could do with our treasuries that would certainly, end up weakening the US dollar, right? And that would be something. But that's pretty much like when I start to care about it, right? When I see an action, especially as it relates to the US, that could have an impact on the US economy. That's one of the reasons that we focus so much on US stocks specifically. It's just, it's very hard to fully understand and apply that signal.
So, for our viewers that have made it this far, I hope you enjoyed the topics we've covered so far. If you did, be sure to like. We are 5 subscribers away from hitting 1,400. So, let's try to get there today on YouTube. But, George, you want to do our switch over now and we'll get into the
I
model
think
trading
I
portfolio?
actually do not even have time for the switch over today. Sorry, I heard you promise that, but we can take a few more questions and then I gotta jump.
Okay, no worries.
If they're all-
So yeah, so if you're in the chat still and we didn't cover something that you're curious about, feel free to comment it. Maybe we'll check QQQ and SPY net options. I see Tesla's up over 16% now. So Tesla's still going up today. I have a little bit of a hunch that I feel like there's a bit of a short squeeze going on there because I don't know if the news was that good. 16%.
Yeah, well, I mean, I think it's what I always say, and that's why I would never bet short Tesla. It's like that thing gets off the rails pretty fast, but it gets off the rails like you don't know if basically people are closing their short positions just to have it go up a little more and open new ones. It's such a hard stock to read.
So QQQ is at 41 for net option sentiment, and the SPY is at 40. So those are both much better levels than we were just, last week or, going on 2 weeks now. So it's good to see a recovery there. Wolf commented, I'm curious how Fed will try to wrestle them sharks. Bit satirical, I would assume.
Yeah. Um, All right. Well, I think that's all.
Okay, so thanks everybody for tuning in. We'll be live again Wednesday, 3 p.m. normal time. So hope to see everybody there. Without further ado, thanks for joining us. Happy trading, everyone. Investing. Bye, George. See you guys.